Good morning, everybody. Hey, welcome to Thursday, Jobs Day at May 7th. Hey, yesterday started out with kind of a down or started up in a good and ended up kind of red in the end. So hey, I hope you're doing well today. Looking forward to my conversation with Dave. And I know that we'll have lots to talk about today as we get ready to move forward and get through this first full week of May. Hang tight. We'll be back with you here in just a second when Dave jumps on the phone.
FM. As train there, good morning. It's 8:39 now, 21 before 9. As we always do this time in the morning, we check in on finances and see what's going on with the economy, your investments, your retirements, and hopefully your job, because that's the primary topic of conversation this week. It's the unemployment rate. We got the first-time unemployment claims in from last week out of the federal government this morning, and Phillip Statler from Statler Financial Services is here to talk about it. 3.2 million more people thrown out of work last week, Phillip, and that really wasn't far off what they expected, right?
No, it wasn't. No earth-shattering miss there. It was a miss. I mean, the folks I follow and pretty much everybody across the board expected that we would have about 3 million, little just a tad over 3 million, and we came in at almost 3.2 million. So that was a miss, not a huge miss, and they gave us a 7-week total now. So we've
Mm-hmm.
got the unemployment number now is 33.5 million people have applied for unemployment over the last 7 weeks, Dave. That's a pretty substantial number.
I think you call it a crash would be the proper term as far as employment situations are concerned, wouldn't you?
You would, Dave. It definitely is. It's not a bright thing to be talking about right now. If you have a job and you are working and getting a paycheck, you are fortunate.
Yeah, that's pretty much the story. But one thing I did read, one article was saying the estimates are that over the last week or so, as various states have started to at least squeak the door open a little bit, they're estimating that now about 5 million of those people that got laid off are now back at work again. It's not an official figure, but it's an estimate from at least one of the pundits out there, and that probably stands to reason. You look at 33 million, 5 million of them now back to work. That's about 15% of the people that got laid off. Looking at our little corner of the world as a sample, yeah, a lot of our people are now going back to work. The biggest bottom line question is going to be how many of that 33, 35 million people that are getting laid off are going to be able to go back to work at all? And that's the part that has a lot of people really nervous.
Well, it does, and like I was talking to a good friend of mine in the Northeast, in New Jersey area, and they are shelter in place until he thinks July 15th. And
Mm-hmm.
that's a huge deal. If those people, if the restaurant workers and the retail people, if they can't get back to work, how are they paying their rent? How are they paying their mortgage payments? That's going to have a ripple effect in our economy. And we may be seeing it majority in the Northeast or in, I think California, they're still having some issues. So it's going to continue to be a problem until we get everybody back on the same page when it says, getting our economies back going again.
And that's kind of the vagary of the way the virus is going through the country. There are areas that are still hot spots that are locking down for an extended period. Michigan's arguing about it a lot, but they're among them up there. Here in our town, we're only at 25% maximum capacity for restaurants. So we're open, but are we completely open? A handful of restaurants I know of have said basically our seating levels are small enough to the point where 25% we can't make a nickel on. So they're sticking with takeout and delivery, and that means fewer staff members on the payroll that are actually being able to come back. And yeah, it's not a full opening yet, and a percentage of those 30 odd million people that have been laid off are back, but another percentage are sitting on their hands for an extended period of time, like you said, up in New Jersey until well into July, which is kind of a scary thought.
Well, that and then as this thing progresses, right? I think that we still have more layoffs to come. I think that maybe not so much. I mean, we've already seen the restaurant, the retail industry. They've been decimated. That there's not much more they can give up. But
Mm-hmm.
there's other industries, government, for instance. their tax revenue is going to be down significantly when it comes to sales tax and those types of things. So you could see layoffs and furloughs within the government system. And we've seen it even in the healthcare system, right? Because hospitals are not even half full. And so why do we need all these health professionals, these nurses, when we're not full servicing patients? So I think we still are going to see more layoffs to come, even as we see some people going back to work.
Distinct possibility on that. Your point very well made as far as government finances are concerned. Even while we were during the shutdown and the busy discount stores and whatnot that everybody was screaming about, most of the stuff people were buying were necessities, groceries, generate no sales tax. So what we were buying wasn't generating sales tax revenue for government either. So they're looking at a number at the end of this month that I suspect that most local and state governments are not going to enjoy looking at, are they?
No, and that's one of the reasons that the next package of stimulus that the Congress is looking at is going to have some relief for state, county, and city type governments, and we'll see how that works out and what those numbers actually end up. How they do that. That's going to be important.
Without a doubt. The other government figure that came out this morning is no surprise to anybody, but it was a pleasant surprise to the analysts anyway. First quarter productivity from the workers of this country down 2.5%, which shouldn't shock anybody since we laid off a potload of them starting about the middle of March. That actually was a surprise to the analysts, I gather.
It was. I mean, my folks thought that non-farm production would have been down almost 5%, like 4.8%, but yet it was only down 2.5%. So that was a pleasant surprise, I think.
We may actually see that number for April then down the line. As far as reports are concerned, a whole lot of quarterly reports out this morning. You've got a pile of them. The one common thread that I'm seeing on my ticker this morning is if you're a brick and mortar retailer, the analysts are pretty much dumping your target stock price down by about half. If you're an internet-based retailer, your stock price target is being increased by somewhere between 10 and 50%. And that probably isn't a big surprise to anybody either. How about the specific companies that are out there, household names that we know about? How are they doing?
We do. We've got, it's kind of a mixed bag today, Dave. We've got Viacom, which people may not recognize that name, but they'll recognize CBS, the media company. They beat by 17 cents a share. Pretty good deal. Up revenue was $1.13 a share. Revenue came in above estimates. They said they had a 51% increase during the quarter in their streaming service and their digital video revenue. So that was a big help to them. And I got to tell you, they are being loved on in the market today. They're up a little over 18% this morning.
Wowzers.
Yeah.
Yeah, a company with an interest in advertising is always interesting to see because the advertising market, with everybody closed, obviously tanked. It didn't help the revenue in the network side or your local advertising places like us either during this period. So it's good to see one of the advertising-based businesses doing well, at the very least, out of one of their ancillary sources.
Yeah. So the other thing I got a few pharmaceutical-related companies there. I got Amerisource Bergeron, which is a drug distributor. They beat by 13 cents a share. They're not traded on the U.S. stock exchange, so don't really have a current price for them. They did cut their full year earnings, though, in terms of the potential of this COVID-19. Bristol Myers came out. They earned 23 cents more than expected. Their revenue also was projected above expectations, and so they're having a pretty good quarter. They are traded on our exchange. They're up about 1.8% this morning before we get going.
Somehow I'd expect headache medicine to sell very well over the last month and a half.
Yeah, exactly. How about the razor business?
Yeah.
Schick Razors, which is owned by Edgewell Personal Care. Schick Razors, Edge Shaving Cream, those type of things. They did miss. They missed by a penny a share. Revenue did beat forecast. They are a company that did withdraw their full year guidance with everything going on, and they haven't actually traded yet this morning. So they closed down yesterday almost 4%.
The question is, how many people are going to keep their COVID-19 beard now that they haven't shaved for a month and a half?
Yeah, it might be painful to get rid of it.
Yeah.
So we got a couple travel companies. We got Hilton. They reported they had a really good quarter considering.
Really?
Yeah, they beat earnings by almost 20 cents a share. Now revenue was in line with what everybody expected. You know, they said that, you know, March is when it really started to hit them. Their revenue, their room rate, that's one of those things that they look at, tumbled 22%, which kind of makes sense, right?
Hmm.
People aren't staying in hotels right now. They are trading up 4.5% this morning.
Survival's a good thing when you're in crisis.
That's right. JetBlue, not so good. Um, they uh, they lost more than what was expected. They were expected to lose about 36 cents a share. They actually lost 42 cents a share. Revenue was also below expectations. They are trading. Where are they trading? Well, they're basically even this morning, but they're down. You know, their 52-week low is $6.61, and they're trading at about $8 a share right now. So they're getting closer to the bottom than they are the top.
I would kind of guess that the discount airlines would really suffer big time because the major full service airlines are cutting their prices to the bone trying to stay alive. No reason to go discount if you can get the same kind of price out of a full service airline, right?
Well, that's true. That's true.
What
Um,
little there is going full service.
yeah, as much as yeah, if you can get the same price or better price. Hey,
Yeah.
let's look at. Got a couple more that are really big interest here. We got T-Mobile. We've
Hmm.
talked about them a lot because they merged in with Sprint or Sprint. They bought Sprint, however you want to look at that. They beat by 8 cents a share. Revenue was slightly below what they expected. They do expect some negative impact from the pandemic, so they've kind of revised some of their results. Let's see if I can figure it. Here they are. They are trading. Well, they're up 9 tenths this morning, so people are, I guess, are liking kind of what they saw.
Cool. Have they finished that merger yet? Is it formally one company now, or is that still off in the future a bit? I don't remember.
I think that if it's not, it's getting really, really close.
Now, it seems to me
Um,
due any time this month. I was kind of curious whether it was T-Mobile Sprint or Sprint T-Mobile yet, or just T-Mobile at the moment.
it says T-Mobile US, so
Okay.
yeah. So I
So
got
far, it's
two.
one of the two.
Yeah. So I got two pay companies. Right? I got PayPal and Square. Both of them provide, you know, electronic credit card services and that type of stuff. PayPal um, missed earnings by 9 cents a share. Their revenue also missed. They are they're expecting a strong recovery though in the quarter that we're in right now. People are starting to shop more online, and the stock price last time I looked, yeah, it's still going up significantly. So it is up almost 10% this morning.
Wow.
Yeah, and
Assuming good guidance does a lot of good these days, right?
yeah, and here's the deal, Dave. It's going to open at a new 52-week high.
See, there are some businesses that make
Yeah.
money. You
So
mentioned you mentioned Square. How'd they do? Then we'll tie the ribbons on it.
all right, man. So Square, they also lost 2 cents a share, but that was a big surprise for them. They were expected to. I'm sorry. Yeah, they were expected to actually make a profit this time of 13 cents. So that's a 15-cent miss for them. Not good. But last time I looked, it's not affecting their stock at all. They're basically up 3 tenths right now. So
I think
yeah.
got to be some eagerness, expecting things to reopen and have people use those chips more in the future. Setting the table for the morning, we had one of those mixed bags yesterday. It was a big mix because the Dow was down almost a full percent, 218 points. Nasdaq, on the other hand, was up by a full 0.5%, up 45. Standard and Poor's in the middle, down by about 0.75%, down 20 yesterday. Looks like we turned a little bit of a corner off of the unemployment picture and the other news that's out this morning. 45 minutes before we open, how much green ink are we in so far, Phillip?
We got some pretty good green ink coming in, and I'll tell you that the jobs report didn't hurt or help us. We pretty much stayed about the same, up a tad bit more, but things are looking good. We've got the Dow up 317 points. We've got the S&P 500 up a little over 42 and a half points. Both of those are up almost a point and a half each. And then we got NASDAQ up a point and a half, also up 135%, 135 points as we get ready to start the day. We've got silver and gold both trading up. Silver's up over 20 cents an ounce at $15.21. And then gold is up 7 tenths, up back up over $1,700 an ounce. And crude oil is looking good today, Dave. It's up 9.5% to $26.25 a barrel.
At least it's going in the right direction. Mixed bag in Asia overnight. Hang Seng and the Chinese mainland markets were generally off a bit. Japan started a recovery. They were up. European markets mostly up midway through their day. Phillip, advice, help in terms of making sure my retirement works for me? I know I can get that advice from you. How do I get a hold of you and make contact?
Yes, don't get in that situation where you're in that FOMO, that fear of missing out. Don't get caught in that. Make sure you got the right amount of risk in your portfolio to do that. Call us. Let's walk you through our financial x-ray, 863-382-0037. Join us on Facebook at Statler Financial Services. And then every weekend, Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m.
And back here for a snapshot tomorrow morning, same time on Light. Thank you so much, Phillip. We'll see you then, all right?
All right, buddy. You have a great day.
Appreciate it. Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
All right, everybody. Hey, as we close up the day today, let me just tell you, thank you for joining us. I hope that your day is well. I hope you'll join me again tomorrow. Until then, have a great day.